This one's a big one that a lot of people have asked about. Boeing. We've got Boeing earnings Tuesday before open. I've got a chart over here that shows a bit of Wyckoff accumulation. And actually this played out exactly from my prediction from last earnings, I would say. I drew this saying that we were going to head up toward the top end of this channel, this little range that we have in terms of Wyckoff. We'll very likely see a bounce off of that, so that might be a little bit of an omen for this upcoming earnings. We might still see the rest of this little gap being filled before that happens, but I do expect that we are in the final stages of accumulation and we could see a bit higher for this in due time. But what will earnings show for us? Well, stacks prints show some puts taken out the last few days. Overall bullish in the long run, but earnings could create a short-term pullback after this run-up since April tariffs were announced. So if we look over at stacks, have a flood of calls being purchased and a few puts sprinkled in here and there. But the last few ones that we've seen are all puts, all aim, and the short-term one that we see over here, $560,000 for August 15th, the 240 puts. So aiming for, I would say, if anything, that might create a bit of a ceiling for us to see. Might peak up a little bit after earnings, but I don't see it going up past that 240 level. In terms of equities, not too much buying pressure in terms of the last 2 weeks, but we do have a bit of buying here and there sprinkled throughout for those last few months. Let's see what Max has to say for Boeing.
All right. So this is an interesting one because like everybody seems to be bullish about them with the orders and all these other like the 737 orders that have come in over the last month and things like that. But we're looking at an EPS of down $1.47, which sounds insane, but that's also up 49% year over year at that point as well. Revenues at 21.86 billion, which is up 29.6%. And the key focus here is going to be delivery volumes, cash flow, and margin expansion. And let's go. So basically, the way this is getting set up, it's a long road back for Boeing. We're talking grounded fleets, regulatory scrutiny, and COVID shocks. Boeing is now back in delivery mode. 737s and 787s are finally ramping. Defense and space orders are stabilizing. Global services is profitable and growing. And Jim Cramer, Boeing's going to have a fantastic quarter. Oh, geez. So we might see a Boeing sell-off here. The question now, can Boeing translate backlog into real profit? So the key points for Q2 will be delivery rebound in full flight. Total deliveries, we're looking at 130 versus 120 last year. 94 for 737s, up from 70. 787s, we're seeing 20, more than double year over year. These deliveries are basically their top line strength. The segment highlights here, commercial airplanes, 9.95 billion, 65% up. Defense, space, and security, 6.4 billion, that's 6.3% up. And global services, we're looking at 5.16 billion, 5% up. Global services doesn't sound impressive, but mind you, that just became profitable, meaning like they just stopped losing money in that division. But defense, space, and security, that is a little bit of a, like you typically want to see like a 10% year over year like number, anything that's over 10%. So that could be a clip in their heel. We'll have to wait and see. Services is expected to deliver 942 million in operating profit, a margin monster in the Boeing portfolio. Cash flow plus margins, as we just mentioned, EPS may still be negative, but free cash flow matters more right now. Investors want to see a path to sustainable profitability. Now, why does this matter to the market? Well, they have a massive backlog. Boeing can't build fast enough, and supply chains are tightening, but demand isn't slowing down, so that's a good sign for them. Aviation recovery play. Boeing is the industrial proxy for global travel. If BA is booming, so is the demand for that travel. Which, by the way, that might not be good because I'm pretty sure every airline just got kicked in the balls last week. American Airlines, Love, most notably. The Defense optionality. Rising global tensions mean defense and security arms are increasingly valuable. Industrial bellwether. Again, BA is the heartbeat of U.S. aerospace. This report will ripple across the Dow and beyond here. Now, what are some of the risks? Well, EPS is still in the red. Wall Street wants to see that reverse here soon. Execution issues. Any slip in the 737 and 787 deliveries could spook investors. Backlog not equaling profits. Because that's usually a big question for companies that have a backlog is like, can you take that backlog and turn it into money? Because eventually those people are either going to go elsewhere to get what they need or cancel their orders. So you got to look out for that. Ramping production without margin can backfire. Regulatory, quality control, and geopolitical risks are still lingering. If it's not Boeing, it's United Healthcare. One of those two companies is constantly causing problems or getting investigated for some shady thing. So it's just, don't be shocked if like a day before Boeing earnings, you hear about how some 737 fell out of the sky or some engine didn't pass or they're cutting corners somewhere. So really what to watch for in guidance: updated delivery targets, margins, and FCF guidance. Defense plus international contract momentum, supply chain visibility. Is there any signs of easing there? And demand trends from Asia and the Middle East. Because those are their two biggest orders. I think like China was the most recent one. They ordered like 27 87s, I think, or something like that. So yeah, we'll have to just wait and see. Again, if you guys followed any of the airline earnings reports, they did not go well at all. They missed pretty much everything on guidance by like an atrocious amount. And some of the risks that they've been taking to rebrand and reinvigorate the brand, let's call it, fell flat on their face. So I'm mixed on Boeing because I feel like they could beat because of the supply stuff, but also because people aren't traveling. How much longer is that like supply actually going to last? And again, that backlog is just terrifying. So anything with a backlog is like you're just gambling on black or red at the roulette table at that point.
But I mean, we can consider the fact that that backlog is already priced in, and it's probably led to this run up so far. The thing I would probably say is it's possible they're going to beat on their EPS and revenue, but I don't see how forward guidance could be that great. I mean, they're going to really have to give some good guidance for what's coming up in terms of their plan to deal with that backlog, and in terms of what all this, in terms of the slowdowns that we're seeing with airlines. They got to spin that in a very positive light for this to head up further at this point. So I would say earnings very likely could be one of those ones where we see it green or a double beat even possibly, but we might see a sell-off because a big part of it's already been priced in for what we see. And that would go exactly according to the thesis that I have with the chart as well. We might see a little bit more of that gap fill, but then very likely a sell-off before it heads up further later in the year.
That would have to mean their supply chain isn't easing then at that point, I think.
Yeah.
Which is going to be, I think that if now that I'm like considering all the factors, I would say like supply chain easing might be a bigger factor than what we're giving it credit for, because that could solve a lot of their issues. Because again, that backlog is just so bad because, well, they can't build fast enough because they have supply chain constraints. Yeah. So it's just like, it's kind of like, okay, we can build 20 planes a year. Well, we're going to order 200. Great. We'll have those to you in 10 years. That means for the next 10 years, we know that they'll deliver 20 planes each year, right? So as an investor, you're like, okay, so I'm just like I'm on a flat line for the next decade. Like, that's insane, right?
Yeah.
Unless supply chain gets eased up and they go, okay, great. Now we can make, with supply chain easing, we can do 40 planes next year. Then that's where investors get excited. That's when the spice has entered the chat. That's when the mayonnaise has been taken off the sandwich. Like things are going to get interesting here. So I definitely agree with that. But now that I'm thinking about it, I feel like that supply chain is going to be the the catalyst or the dynamite stick that either blows this up or blows it into the floor.
Yeah, like we've said for this earnings report, this time around is a lot of where the tariff news has finally been priced in. I could definitely see that being another headwind that would limit that could limit the EPS and the revenue for Boeing if they are being subjected to a lot of those tariffs as well. So definitely would say probably, I love what Stacks is saying in terms of the bullishness, but I think earnings, especially because they do report Tuesday, keep an eye out. A lot of these ones that are reporting Tuesday, keep an eye out on Stacks and see what comes in. What would really pique my interest is if you see one of those unusual and big money prints come in for extremely short term. So if we're aiming for end of next week, or anything that's what 8-1, 8-8, or 8-15, any of those prints that they're spending over $1 million on, and if it comes in with that blue line as well for Stacks, those are the ones I would say are worthwhile to look at for earnings plays, and very likely somebody is in the know for it and is expecting a bigger move that you might want to be a part of. So keep that in mind.